your help. So let's begin. I appreciate everybody coming. Today, we're going to talk a lot about profit and loss statements and how to use them and make them a tool so you can evaluate and improve your business. I'm going to talk for about a half hour, and then we'll welcome Carrie Ellenwood, who is a representative from the SBA district office, and she'll talk a little bit about what they do in the district office. In case you're new to SCORE, what we are is we're a national network of business mentors. We all volunteer, and we offer a lot of services that are confidential at little or no charge. And we have a lot of mentors from a wide array of professions. And sorry, I'm getting another message here that I'm not sure about. Okay, I closed that. And we provide a lot of workshops and events for business people from a wide variety of topics. And we do some in cooperation with the SBA. And we also have at our website, score.org, a list of all of the webinars that we do live, plus a whole variety of recorded webinars that you could watch on demand, and quite a few blogs and articles that I think you will find really helpful. So my name is Annette Russ, and I'm a retired CPA from Chico, and I've been with SCORE for about 20 years. And when I was in practice, I specialized in mentoring small business clients and did a lot of tax preparation and as well as accounting. And in addition, I've taught business planning classes through my local North Valley Small Business Development Center. So let's get started with profit and loss statements. And this is a basic profit and loss that you might be familiar with. All of the profit and loss reports and that I'm going to show you in today's webinar, I have generated using QuickBooks. And just an aside note, in January, I'll also be doing an introduction to QuickBooks webinar if you want to check that out. So as you can say, this profit and loss I ran from January to December of 2020. I can run my report from any period of time, but I wanted to run it for the whole year. And it's very straightforward. It has sales, all of my expenses, shows the total of my expenses, and shows what my net income is. So this is absolutely the basic profit and loss. It has good information on it because I can see all the categories of expenses and how much those cost me throughout the year. But it's hard to look at it and hard to interpret it and hard to know how to interpret it, how to analyze it. What kind of things should I be looking at? What kind of things should I be paying attention to? Because it's not very detailed. So one of the things that you can do through QuickBooks, and probably a lot of other different kinds of software, accounting software, which I'm not advocating for QuickBooks, but it's the one most commonly used, is that you can do a detailed profit and loss that now shows you what some of these broad categories actually consist of. So for example, computer and internet expenses, I had basically internet fees and perhaps website. And let's go down here to repairs and maintenance. I had equipment expense, or equipment repairs and maintenance, and facility repairs and maintenance. And then under insurance expense, which was on the simple profit loss that I showed you just a minute ago, I can see that I have building insurance versus liability insurance. So now I'm looking at a much more detailed picture of my profit and loss. Not only am I being able to see more in depth of what my expenses were, I can always also use this as what I call, does this make sense test? Because when I'm doing my accounting, or I'm having somebody else do my accounting, things can get misclassified. And so you may look at this profit and loss and you may say, oh my gosh, payroll expenses were $5,000. How can that be? And then you can go and look behind the $5,000 and look at all the source documents and all the source entries to determine why that payroll expense is that high. It's possible that that's correct, but it's also possible that maybe something has been misclassified in creating your profit and losses. So this is the more detailed form, but this is just a start from what you should be looking at to start using your profit and losses as a tool to make decisions about your business, to make changes, to analyze sales. And to do that, you can, oh, excuse me, let me back up real quick. The previous slide that I showed you was for a service business. So all the sales were service fees, basically, like an accountant or a lawyer or a doctor. So this profit and loss that I created is actually for a business that actually sells a product of some sort. So what's different from the previous profit and loss, which only had sales, this profit and loss has a category called cost of goods sold that shows the product of the cost, or the cost of the product, and the amount of wages that I spent in order to sell this product. So that's a really important number, because what it gives you is your sales less your cost of goods sold amount, which is 1,050, gives you what's called your gross profit margin. And that's a really important figure, because the cost of your products are going to vary depending on how much your sales is. So if I sell one product for $10 that costs me, or one product for $100 that costs me $10, my sales would be 100, my cost of goods sold would be 10. But if I sold 5, my sales would be 500 and my cost of goods sold would be 50, right? So this product cost and the wage cost is going to be a variable cost depending on how many products I actually sell. So down below, under listed expenses, these are actually what we call fixed expenses. And all of these expenses that are listed here are actually expenses that I'm going to incur, whether I sell one item or whether I sell 100 items. Things like advertising, automobile, other payroll expenses, the rent for my facility, my repairs and maintenance, et cetera, et cetera. So what I have here is a mixed kind of expenses. My cost of goods sold is a variable expense, and it's going to change depending on how much my sales are. And then all of my fixed expenses that I have to pay every month, no matter how much I sell. What this profit and loss is showing me based on my gross profit is that I have $31,950 to pay for all of my fixed expenses, which are $19,525. And when I do that, I get net ordinary income of $12,425. So I'm looking at this number, and because I see that there's $19,525 fixed expenses every month, one of the things that now I'm thinking about is that my gross profit needs to be at least as much as my fixed expenses in order to break even. There is one expense that's not on that previous profit and loss and is quite often excluded from small businesses' profits and loss, and that's what's called depreciation. And it's a funny type of expense because you don't have a cash outlay for it. It's a non-cash expense, and it requires basically requires a different kind of a manual entry into your record keeping in order to track your depreciation expense. So what it is, it's a portion of your company's fixed assets that is being used to operate your business. And those fixed assets are like equipment and office equipment, regular equipment, autos, your building and such. And it doesn't include real property, like the land that you have, your facility is situated on. But what you do is we're going to calculate, it's a calculation based on whatever the life of the asset is and the time period of the profit and loss that you're reporting on. So what we do with depreciation is we take into account how much the cost of the assets we're using up each reporting period, because you have a general outlay, right, of like $100,000 for your regular equipment. Now we need to cut that down into smaller pieces and make sure that that gets entered into our profit and loss. And how you do that is you take that cost of the asset and you base it on a lifetime span that you think that the equipment's going to last, and you divide it by the 10 years. So in this case, it's 3,500 divided by 10. So depreciation is $350. So here is my profit and loss, and I have adjusted it. So I see the depreciation expense of $350. And in that case, I have a much more accurate calculation of my net income. Okay, so here's a couple of other things that you can do to your profit and loss. And I want to stop just a second because I know you'll probably have questions as we go along. And I'll talk for about 20 to 25 minutes, and then I will address your questions at the end of the presentation. If you'll be patient with me. Okay, so here's another report that I generated on QuickBooks. And what this report is about is that I am looking at my expenses as a percentage of my income. So basically what I'm doing is I'm taking my expense of $800 and I'm dividing it by $15,000 to come up with the fact that advertising and promotion of $800 is equal to 5.33% of my income. And so I've done that for all of these categories that you can see here that were on my original profit and loss. And once again, you can see that I've done this in a detailed, rather than just insurance expense, I have all the details of my kinds of expenses, and the same down here with repairs and maintenance. So now I can look at these percentages and really see, whoops, let me go back, previous, sorry. I can look and see what percentage of my income am I spending on each of these expenses. And this is a really valuable step back look at your profit and loss, because what I have come to understand from working with small business owners is if they're not record keeping on a consistent basis and looking at your profit and loss on a consistent basis, but when you do print it out, and especially in this form, there's quite a lot of surprises, because in your mind, you haven't really tried to get a feel for how much of each dollar you're in sales you have that is going to pay for one of your expenses. And now I can say, oh my gosh, I didn't know that payroll expenses was 36% of my sales. That's huge. And now that gives me the chance to say, oh, wait, maybe I need to look at my payroll expenses and find out why the payroll expenses are that high, and maybe what I can do to see to lower my payroll expenses. So I can go through that. And then again, this is one of those does this make sense kind of a things, because I'm looking at it and should my liability insurance really only be 1%, or have I misclassified my liability insurance into another account like rent, for example, because that seems really low to me, 1%. So I'm looking at this as kind in an evaluative way that tells me again what kind of things that I need to look at and consider. Again, utilities is not very much, probably for your facility. Maybe I have some of the utilities in telephone expense, or I have them incorrectly classified somewhere else. Let's look at another one that I think is a really important one. And this is the ability to look at last year compared to this year. And I find this one to be really, really important, because you want to look at trends in your business and start to think about what kind of events or actions or decisions you've made about your business that has changed from year to year, that is responsible for that change from one year, like December, from 2020 to the next year of December 2021. And you can actually, on QuickBooks, you can actually format this so that you can see 3 years in a row. And then you really get a sense of how the trends in your business have gone. So when I look at this, I can see that from December 2020, my sales were $18,000, and in December 2021, they went up to $33,000, which is a huge jump, right? It tells me that the change between those 2 years was 83% of a change. So now I'm looking at this, and I chose 2020 and 2021 for a purpose because of COVID. And now I can look and I can say, yeah, in 2020, people weren't shopping. I had my store only open 3 days a week, And then in 2021, we opened up again. So now I'm going to look at the expenses, right? Expense change. And this is interesting. Here's what this tells me. My expenses increased 106% from $750 to $1,550. And once again, I'm looking at it and I'm thinking, okay, well, that makes sense, because business really fell off in 2020 because of COVID. And in 2021, I really had to make a concerted effort to let people know that I was open. So I ended up running more advertisements in the newspaper or on TV, or I did more emails or whatever things that I do as far as advertising. So let's look again and see bank service charges. That's 100%. Maybe the bank just raised the cost of their service charges. A lot of these things went from, and of course, so let me stop just a second and say these numbers that I put in here are nonsensical. This is not a real company, and I just kind of made up the numbers as I went along. So some of them are nonsensical, and but I did this just for illustrative purposes. I just really wanted to highlight the kind of things that you can be looking at when you're looking at your profit and loss. Again, you go down here and this makes sense that car fees really jump. Automobile fees really jumped, basically because I have gone from not going to work just 3 days a week to being open all the time, right? So line by line item, I can go through here and I can figure out why my expenses changed so much. And it could be that my building insurance just went up, or my liability insurance doubled. And if I see these and I just wonder, is that really right? Again, I can go to the source documents and say, and look at it and really explain to myself and then decide. So for example, liability insurance, if it doubled, maybe I should be shopping around for a different insurance company so that I don't have, that might be cheaper. So those are the kind of decisions that are really important for making sure that you're maximizing your net income and controlling your sales. This could have been the absolute opposite in the fact that this could have been 2020 and this could have been 2021, and everything could have dropped dramatically. And so you would go at it backwards, right? You'd say, well, why are my sales not in line with what they were last year? This next one is actually called a profit and loss forecast, which is another number for budget. And this, your budget can actually be entered into QuickBooks so that you can write, so you can run a report like this where you're looking at what you budgeted for what you actually did. A lot of people, business owners, do not want to make a budget because it seems like such an ephemeral thing, because quite often you're having to guess, do your best informed guess as to what kind of sales you're going to have and what kind of expenses that you're going to have. And one of the things that is important when you're doing a forecast is that it's not all guesswork, because I can look at, let me go to the previous one where we did the analysis of how much percentage of my sales all of these were. And I can use these percentages to actually create my profit and loss. I can say, okay, this was actually supposed to be 5% of my sales. And I could start making a forecast and take 5% of 36,000 in order to make up what my advertising expense is. So one of the things that frightens people off about budgets is they feel like it's set in stone, and it's not set in stone. A budget is actually an ongoing process where you're actually kind of what you're aiming for, what you're shooting for. And sometimes, and as the time goes on, you can always, if you've budgeted for a year, you can always take that old budget and make adjustments on a quarterly basis and make some adjustments for what you think about the next quarter, so that budgets are not written in stone. They're a tool. Budgets, people think of budgets as, oh, I can only spend X amount, I can only spend $1,800 on advertising and promotion. No, a budget is actually, I'm aiming to spend $1,800 on advertising and promotion in order to generate $36,000 in sales. But if I just find out that that's not working for me, then I can project for the next quarter that I need to increase my advertising and promotion by another 20% and boost my sales. So this is a really, really important, I think, for business owners, and to look at it consistently, like quarter to quarter, because this is really going to be able to help you achieve the sales goals and the expense goals that you have set for yourself. And this is where you really get a feeling for how your business is going and how to make changes that is going to maximize your sales and maximize your net income. So in conclusion, I'd like to say that, of course, it's one of the most important tools for growing your business. It allows you to be proactive and not reactive. It allows you to monitor your business on a consistent periodic schedule, monthly or quarterly or biannually. But if you do it on a consistent periodic schedule, you are able to see a very clear picture of your business and what kind of things you need to change for the coming periods. So you're being proactive. So a lot of small businesses, unfortunately, are wearing owners are wearing big hats, right? You're wearing the hat that runs your business. You're wearing the hat that markets your business. You're wearing the hat that has to do the accounting. And so one of the things that gets put off to the side quite often is doing your accounting, because you're busy running your business, trying to make money. And so it's a real temptation to wait to the end of the year or tax time to actually organize your income and expenses. And this is tough. That really puts you behind the 8 ball as far as being able to make changes in a reactive way, so that you are in control of your income and expenses. What I tell people is, you want to do what you're best at in a business, and you're probably best at running your business or marketing your business or servicing your customers. You're probably not a great accountant. So if you're having trouble organizing your records and keeping your income and expense on a regular basis, I truly recommend using a bookkeeper, hiring a bookkeeper, a good bookkeeper to do this for you, so that you have relevant, up-to-date information as you look at your profit and loss statements. So at this point, I would be happy to take some questions. If you want to do a question in the chat section, and if not, I'm going to turn the webinar over to Carrie Ellingwood, and she's going to tell you a little bit more about what SBA does and what kind of programs they have. So Carrie, are you there?
Yes, I'm here.
All right. Okay. Thank you again for attending, everybody.
Oh, looks like there's a question in there.
Oh, there's a question. Okay. I got 2 questions, it looks like.
Yes.
Okay, so the question is, the example you showed is specific to each business and will not have the same number of rows necessarily. Is that correct? And that's a very good question. And no, your business is going to have line items, expense categories specific to your business. And you're going to define what those categories are. And not every business is going to have all the exact same expense categories. And you will go through and you'll be able to define, based on your receipts, what those expense categories should be. And I got other one over here. Oh, and it's just a thank you. You're very welcome. All right, Carrie.
Okay, well, hello everyone, and welcome to this webinar that you've gotten some very good information. I like the way that she said having a budget isn't something necessarily you're forced to stick to, but it's a target that you're aiming for. And if you have to modify it to continue that growth in your business, then modify away. So great information there for all of you. I hope you take the time to review those slides and my slides, because you will receive them after our webinar is done. I am Carrie Ellenwood. I'm the Deputy District Director with the Sacramento District Office of the SBA. We have 68 district offices across the country. So if you don't happen to be in the 21 northeastern interior counties of California, you have a district office nearby you, and all you need to do is go to sba.gov and put in local resources, and you'll be able to find your district. I'm going to talk with you today about what SBA has to offer small businesses, individuals that are getting ready to start their business. And I want to share some slides with you to go over all the different things that we have to offer you. First and foremost is we are a federal agency. We're the smallest federal agency in the country until COVID-19. That caused us to have a growth of people trying to support that economic injury disaster loan program. So that program has ended, and now some of you that have those loans may be receiving emails trying to assist you in making those payments. We also at our district on January 10th are going to have a webinar for small business owners who did receive an economic injury disaster loan for COVID-19. And you can go to sba.gov/Sacramento and you can find that webinar there. You can also sign up for our newsletters that come out on a weekly basis that give you information of upcoming webinars and resources. So there's 4 areas basically that SBA works in and helps small businesses. We help you with access to capital by guaranteeing loans for banks. We also help you with counseling, business counseling through our resource partners like SCORE. We also help with government contracting, how to get into government contracting, and then of course, disaster, which I just mentioned. So the first area I'm going to cover is our loan programs, and I'm going to be going very quickly today. It's a lot of information, but you will receive these slides, and we'll try to cover everything so that we may have a few minutes at the end, hopefully. So our loan programs, the primary loan program we have is the 7A loan program, and this is a guarantee program that banks and credit unions use to expand their credit box and make a small business a loan that may not otherwise qualify. We also have intermediary lenders that are non-bank institutions that do microloans up to $50,000. And we have another program called the 504 program, which is for construction and commercial buildings and large equipment that small businesses can take advantage through a certified development company. And I'll talk a little bit more about these programs, but you may be wondering, well, can I have an SBA guaranteed loan, or can I participate in the SBA guaranteed loan programs or 504 program? Well, the eligibility characteristics are you need to be operated for profit. We're not able to support nonprofit organizations with these programs. You also need to be a US citizen and not exceed the small business size standards, which are very generous. You can find those at sba.gov/contracting, and that's determined by your NAICS code, NAICS, and you'll find that information on our website. You also need to be of good character so that these are backed by federal deposits from taxpayers. So we want to make sure that you're of good character, and your lender will work you through that part of the application. You want to have management experience and the ability to manage this type of business. And the types of for-profit businesses that we are not allowed to support are speculative real estate development, and anything that's of a prurient nature. We also cannot support anything that is related to the marijuana industry, although it is legal in California. It has not been recognized as legal federally. So the way our programs benefit you as a small business person is that they help the bank widen their credit box to allow you access to funds when you may not normally qualify. We also have interest rates that are more competitive than a typical commercial business loan. And if you have current debt, so let's say you're a small micro entrepreneur and you started your business with a credit card, and now you've grown and you'd like to benefit from the SBA loan rates, you can roll those debts into an SBA guaranteed loan as long as you can verify that those expenses were for your business. So one tip here is, if you're starting your business, make sure you set up a different account, a different accounting system, and don't mingle your personal funds and expenses with your business. That makes it more difficult for the lender to loan to you. And then with the SBA 7A guaranteed loans, there is a fee for you to participate in that program. It's like purchasing insurance. So those you can put into your loan amount, so you would not have to come out of pocket for those fees. 7A loan guarantee program. These are the highlights of the program, and I'm going to go very quickly because I see our time is going. It's primarily for business loans. It has a wide option of financing. So if you need working capital, that can be financed for up to 5 years for payroll, inventory, things to run your business. If you're purchasing equipment, that can go up to 10 years. And if you want to purchase real estate with an SBA guaranteed loan, that can go up to 25 years. And if you have a mix of use for your funding, then that rate will be blended for you. Most of our lenders use the prime rate right now, and it's a variable rate loan. So typically you won't have an opportunity for a fixed rate loan. The maturities and interest you can see here, 5 to 10 for working capital, machinery, equipment. Typically you have prime plus 2 1/4 for loans of 7 years or less, and then prime plus 2 3/4 for loans over 7 years. And they can be higher if you have a smaller loan amount. So you'll want to walk into your credit union or your banking institution and ask them if they participate in the SBA guaranteed loan program. And if they do, they can walk you through some of the specifics about your situation. One thing you're going to want to make sure you have is your business plan, which SCORE can assist you putting together, some cash flow projections, so they have an idea of what you plan on selling and how you'll be able to repay the loan, because these are not equity or asset loans. They're based on your ability with cash flow to repay them. And you'll also want to have 3 years business and personal tax returns. If you have not been in business that long, bring for sure 3 years personal tax returns and your business tax returns or current balance sheet and income and expense statements. So the guarantee fees, if your loan is $350,000 or less, that fee is being waived for our veteran community. $350,000 and up to $700,000, it's 2.77% of the guaranteed portion. And for over $1 million, it is 3.5%. Anything over that, it's 3.75% of the guaranteed portion over $1 million. So I'm going to give you an easy example with $100,000. So you would go to your lender and they would put together a standard 7A loan, which is a 75% guarantee. There's also express loans with a 50% guarantee. So you have a $100,000 loan and you have that guarantee on the loan. And let's say for some reason you can't repay that loan. What happens is the lender will liquidate your assets, and then the lender will come to SBA and ask us to fulfill that agreement with that guarantee. So let's say you had $50,000 left on your loan. SBA would go to the lender and give them $35,000. They would write off the $50,000, and the $35,000 would remain a debt outstanding for you. The federal debt can't be forgiven or washed away. It's going to stay with you. So that $35,000 of the guaranteed portion, you will need to work out with our Treasury Department a repayment plan. These are not forgivable loans. That program was the Paycheck Protection Loan, which has ended. So it's very important as a small business, as you're looking for access to capital, that you have a good plan of how you're going to use those funds, and that you also understand they will have to be repaid. The federal Treasury will work with you to set up a payment plan. And unfortunately, you would not be eligible for any further SBA guaranteed loans or SBA 504 loans. This is a slide that outlines the 504 loan project. And again, if you had $1 million project, the benefit to you is it's a long-term loan program for asset purchases. You only have to come up with 10% down to purchase that piece of real estate. Usually that can be anywhere from 25, 30, 35% that a lender's going to want. So with the 504 program, you work with the certified development company, and they will assist you in putting the paperwork together. You will also work with a lender for that 50%, which is the first note that's shown on the slide here. Then, as you go through the process, you will only have to come up with 10%. And the SBA debenture is the remaining 40%. And for that portion of the 40%, you need to create or retain one full-time equivalent employee for each $65,000. So if we use $1 million project, the bank loves these because they're in first position on a piece of real estate with only a 50% equity amount against it for the loan. The SBA comes in behind that in second position with $400,000, and you come up with $100,000. So on that $1 million project, you've got $400,000 of the SBA debenture. That will require approximately keeping or adding a total of 8 full-time equivalent employees. And that's where the certified development company will come in to assist you in keeping track of that during the life of your loan. Oftentimes our rates are below market. Right now, the real estate and all interest rates are going up. And currently the SBA portion of that loan, that rate is, those debentures are between 6 and 6.25%. The rate is not determined until your debenture is sold in the secondary market and it funds. So when you speak with a certified development company, they can give you an idea of that loan rate, but they won't be able to give you a firm price until that project is completed. You will negotiate your rate with the lender who's in first position. And then again, only out of your cash flow, 10%. So this is for growing businesses that have been in business for a few years. Any SBA real estate has to be occupied by the owner 51% or more. So if you are growing and you find a piece of real estate and it works with your plan, you could move in with 70% occupancy, and for a period of time, you could sublease that 30%, but you could not just purchase commercial real estate and lease all of it out. You have to be the primary occupant in an active business. So the next thing is our federal contracting programs. The federal government is the largest purchaser of goods and services in the world. We purchase billions of dollars of goods and services, and small businesses are a set-aside opportunity for you, and the government tracks that. SBA tracks how each federal agency is doing in making sure they do business with small businesses. There are certain additional set-asides that are available to you if you meet the criteria. We have our women-owned small business set-aside, which is at 5%. We have our 8A disadvantaged small business set-aside, which is 5%. We have our hub zone, which is historically underutilized business zones in rural areas at 3%, and our disabled veteran set aside at 3% as well. So this is a great opportunity for you to obtain business with the federal government. And it's not easy. I'll be the first one to tell you that. You're going to have to fill out applications and forms. Right now, SBA has a wonderful program for you to get help to do that. It's called our Procurement Technical Assistance Center. They're all across the country. And what they will do is they have webinars and one-on-one assistance going through those application processes for you to make that a little better experience. So I encourage you to go to the sba.gov/contracting and take a look at what it means to contract with the government. And there's also an opportunity there for you to ask yourself some questions to find out if you're ready for that government contracting. And then, as I mentioned, our SBA Resource Partner Network are all partially funded by SBA, and none of them will charge you for their one-on-one advising. They may have webinars that have a small fee associated with them, but your one-on-one individual business advising and counseling is your prepaid tax dollars at work. I don't like to say free because really you can look at it as if you've already paid for that. So you might as well take advantage. As the SCORE organization mentioned, they have many different areas of expertise, from accounting to marketing to web practices and all kinds of things. Same with our small business development centers. They're located across the country. The Women's Business Center Network is located across the country. All of these serve anyone who comes to them. It's just which one fits your needs the best. The Women's Business Center are focused on issues that women face as they start or grow businesses, but they will help anyone else who comes to their door. We also have a Veterans Business Outreach Center, and they are specifically designed to help veterans and their families. If their spouses are running a business while they're out of the country or serving, that they have specific support available for them. So take advantage of all of these resources. They're across the country. No matter where you are, you will be able to find some help for your small business. The last slide I'm going to share here is our contact information. Our district office is located in Citrus Heights. At the moment, we're not open for public, but we can advise you via virtual meetings or phone calls or emails, whatever way that you can reach out to us there. That information is up on the screen for you. And also, if you did receive an economic injury disaster loan and you have questions about how to manage those payments, there was a 30-month deferment. The first individuals started having information sent to them about those payments in October. So we've now had October, November, December. And so more people of the 4 million small businesses that were helped are starting to get information on how to make those payments. So please take a look on our website, again, at sba.gov, and you can find information on those loan products that were offered during the COVID-19. And my last slide is a QR code. We always look for your feedback. We want to know how we're doing. Are we serving you? Are we meeting your needs here from the SBA to you, our small business community? So please, when you receive your slides, or if you take a shot of your screen now and would like to let us know how we're doing, I'd be happy to have that feedback. All right, that is all I have. And I actually have some time for questions for myself or our SCORE volunteer here. If there's any questions, please feel free to put those in the chat.
Do you see the question here, Carrie?
Yes.
Okay.
How do I? Okay, so you're working with the SBDC and you're applying for disabled veterans and women-owned certifications. How do I submit a bid proposal? So what you want to do before you even think about submitting a bid proposal is making sure that you've got those certifications in hand. You'll be using the beta.certify.gov program, and I encourage you to reach out to the Procurement Technical Assistance Center. And the one in Sacramento here is located at California Capitol. They have advisors there that can specifically help you make sure you get those certifications in place correctly. And then also they will be able to assist you with how to put a bid together for federal government contract opportunities. It's important that you understand that there is a transition going on with our veterans certification. Beginning January 1st, it will reside with SBA. Previously, it resided with the VA. So if you have a current veteran disability certification with the VA, you will have a year of period of time to transition over to SBA. So if you're in the midst of that and you either have it or you're in the process, let that process run and it will get you to that certification. And if you're already certified, you have a year to get into the SBA program. It's going to be wonderful because it will house both our 8A disadvantaged small business program. It will house our women-owned small business program, our veterans-owned small business program, and eventually our hub zone program. So it'll be kind of a good place for you to get both of those that you're mentioning here with one stop, putting your information in one place. I hope that answers that question. I'm not sure, SCORE, what.
Posting information about so that you can network with others on this webinar.
So if you want to share maybe your email and that kind of information, I don't see a reason why they couldn't do that.
I think so too. But the other alternative would be to go to the website at Capital Corridor SCORE and send them an email, and they have a list, I think, of participants, and they could send out some sort of a blast email and ask for people who are interested in networking as well. So I think you could do either. But for those of you that are maybe interested in networking but don't want to put your information here, I'll let Christina know. She's the administrator, that maybe somebody will be contacting her about that.
All right, very good. Are there any other questions?
there's another one. It says a procurement SBDC person is helping me.
Oh, okay. So that's good. I'm glad you've got someone helping you with that. If you want to look into what it might look like, if you go to the SBA.gov website and the contracting section, it lists some tools that individuals who want to work with the government can use to find out what's going on. One of the places you must register is sam.gov. You need to register there before you can do business with the federal government. So you could take a look at sam.gov. And if you're comfortable trying to set up that yourself, then once you got that account set up, you would be able to then see some of the things that are going on. At the moment, I can't think of the name of that tool that's in there, but you would be able to get an idea what a request for a proposal looks like, and maybe an idea of what some people have won when they made a proposal.
There's one other question here, and I think Carrie addressed this, but I'll also say it again, is yes, you will get a copy of the presentation and with all the references, and it has all the emails that you can contact the SBA with, and it'll also have my email, my SCORE email, so that you're welcome to contact me. And somebody just did a thing in this chat that you might be interested in reading. If you want to click on the chat button down there, and this person is talking about developed a mobile app that will help facilities comply. So that might be something.
Unfortunately, the federal government has one grant program that's called S as in Sam, B as in boy, I as in interest, R as in return, SBIR. You can Google that and you'll find information there about how that program works. It's different, and it requires you to have something that the federal government might want to use, and then you would put a proposal together for that. There are state and county and some cities have grants available, but unfortunately our COVID loan program, and there was a small portion that were grants, is no longer available at this point. So I'm glad you're doing well in 2020. That's great. So take a look at either Googling SBIR. I'm going to put that here in response to you, or you can look at grants.gov.
Okay, thank you, Carrie. Are there any more questions that you'd like us to address? If not, thank you very much for attending. I hope that you come away having gleaned a little bit of knowledge from this, and be sure and check in with Capital Corridor SCORE from time to time, because we run a variety of great live webinars as well, and you're able to sign up there, and they're mostly free. So thank you again for attending, and good luck to everything with your business.
All right, thank you, everyone.
Bye.
Bye-bye.